Hey everybody, today is Friday the 10th of September 2021. This is Brian Shannon from alphatrends.net. We had a little bit of selling here this week. Oil was higher, as were bonds and the volatility index, but everything else was pretty much lower here and finished right on the lows of the day. So here's a 15-minute chart of the S&P 500, meaning each candle is 15 minutes. And as I always refer to, the direction of this orange 5-day moving average gives me my intermediate term bias. We've been below that and finding resistance at that declining 5-day moving average the last few days with this pattern of lower highs and lower lows. We failed to hold above the August volume weighted average price, and that tells us we have to look at a bigger time frame to see what the potential is. Now, we've got the volume weighted average price off of this gap, which might become important. If not, then the conjunction of the volume weighted average price off the July high and July low, those kind of come together down in about the 442-ish level, and that's approximately where we see the 50-day moving average as well. So we're still that is, as of today, we're guilty till proven innocent because we're below the declining 5-day moving average. And it tells me that if we, let's say we gap up Monday and then we continue to rally a little bit, if we do something like this, I would be looking for opportunities to reduce long exposure, or if you're a more aggressive trader, maybe initiate some short positions. The Nasdaq broke below its important level here, which has been holding for the last 2 weeks or so, and this little band of support at the 378 level, as you can see, had been holding up. But what we were seeing is that the 5-day moving average was rallying, and then it started to turn sideways. Then we broke below it, and this is our first lower low below that. So now what we'll be looking for is if this market can quickly get back up above this level, perhaps it'll save a bigger sell-off. But instead, if it finds resistance there and then breaks lower, I think you'll see at least a test of this volume weighted average price, and perhaps something bigger, such as the volume weighted average price from even that green from that July low. The 50-day moving average kind of comes together with an important prior band of resistance down at about 370, and that's not out of the realm of possibility. So I think the message of the market is, be careful here. We're going to talk about Bitcoin at the end of this video too, so hang around if you're interested in that. The Russell 2000, as I mentioned to subscribers, numerous times, we got stopped out of this. We were looking for a move to the high end of the range, but again, when the market breaks below that 5-day moving average, it's time to get out for a swing trade. It's just that simple to me, and that's what we had done. So we're right on the volume weighted average price from the August low and back to the midpoint of the range where we see the 20 and the 50-day moving average in the year-to-date VWAP. So Russell 2000 just remains a sideways mess over the bigger picture. We had tried the long side, made a very small amount on it, and got sent to the sidelines by the market. You've got to listen to the message of the market. Semiconductors made a new all-time high today, but then did pull back. Now this is still the strongest group. You can see they're still above the rising 5-day moving average, and that blue line, by the way, is the week-to-date volume weighted average price. If this ends up being from a failed break higher comes a fast move lower, I'd say look for a move down to at least 266 next week. That's where we see that volume weighted average price, as well as the rising 20-day moving average. Biotechs are still just kind of hanging around in here. We got stopped out of these guys just a couple days ago right in here as well. So that was a trade that we had put on, I believe, over in here, and a very small gain, but we're below declining 5-day moving average. There's no reason to continue to hold on the long side. Perhaps they set up again next week, but for now, I think it's neutral at best. Going to need to get back above and hold above 175 or so for the buyers to regain some momentum. And financials have kept us out of this market simply, again, by listening to the message of lower highs and lower lows and the direction of the 5-day moving average. On Thursday, we got back above the 5-day moving average for a while, but it was still declining. We want to see a flat to rising volume weighted 5-day moving average before we can trust it again, and we're not seeing that. So instead, it's a great market to avoid, not to sell short because we're in a primary uptrend. Let's see how this 37 level holds. That's that prior resistance as well as the 50-day moving average. So if it holds in there, perhaps it can rebuild and set up for a long side trade, but I'm not going to be a buyer into that level because we don't know if it's going to be support until it actually turns down and then rallies back up, and then as it starts to rally up we can say, okay, that was support, but we don't know where support is or will be. If energy names continue to be a mess, they're just kind of neutral, doing nothing in here. Let's talk about Bitcoin for a moment. Here's the daily time. Actually, that's Ethereum. Let's look at Bitcoin, BTC. Here we are. So Bitcoin, we had this strong sell-off this week, and it was really pretty cool to see that the exact low was found at the conjunction of three levels. The volume weighted average price off of the all-time high comes in right here. The year-to-date volume weighted average price, it's that orange line, comes in right at that low. And then we've got the volume weighted average price from the July low. Off that July low, we saw that it came down again precisely to that, and then we got a bounce. Well, let's take a look at that bounce by looking at a 30-minute time frame. Each candle on here represents 30 minutes. So this is the volume weighted average price off of the high that we had seen Tuesday morning, and that cascade lower. You can see yesterday I put this on Twitter yesterday, Thursday morning, saying, be aware, we're at a level of interest, likely resistance, and in fact it was resistance right there. So I'm looking at Bitcoin as right now it's trying to stabilize after this large sell-off. The sellers are still in control from that point in time, and what I'm hoping we see in Bitcoin is a pullback right down towards this green level again. So at about 48.6, 48 to 44,000 to 43,600. I think in that area it's a level of interest that I'm going to be looking at shorter term time frames to see if there's a reason to get involved. But for right now, it's just a level of interest. It's not an action point until the market tells us. Anyways, I think the message of the market going into next week is certainly one of caution. As long as we're below that declining 5-day moving average, you've got to give the benefit of the doubt to the sellers in the intermediate term and don't get chopped up trying to buy lows as they continue to go lower.